Welcome to the Safe Money Retirement Show with your host, Tim Wood. Tim is a retirement and income specialist, certified financial fiduciary, and the founder of SafeMoneyRetirement.com. Tim primarily serves Western North Carolina, East Tennessee, and Southwest Virginia, but he's sought after nationally for his expertise in helping people secure their retirements. Mr. Wood is a licensed life insurance professional in multiple states and specializes in working with people who are near retirement and those who have already retired with wealth management, income planning, and asset protection strategies using life, health, long-term care, and annuity insurance products. And now, here to talk with you about securing your retirement, your host, Tim Wood.
Welcome to the Safe Money Retirement Show. I'm Tim Wood, an asset and retirement protection and guaranteed income specialist. For many of my longtime listeners, the fact that the Tax Cuts and Jobs Act expires at the end of 2025 won't be any kind of a newsflash. But it's something that people need to realize, that the current low tax environment that we're in, even though people think we're taxed to death, look at the history of taxes in this country since they started. Now, obviously, before they started, that's a different story. But if you look at the history since they've started, we are at still very low, historically low rates. Well, that's set to expire at the end of 2025. And what happens in Washington this November is going to have a big difference and have a big impact, I should say, on whether that's continued or some other form of it is enacted or we just go back to higher tax rates or whatever. But here's what I want to point out. Between COVID-19 relief, the Ukraine and Israel wars, and all the other international and domestic obligations, it's created literally trillions of dollars of additional debt for our country. So much so that Fitch actually downgraded the U.S. debt in August of 2023. And here's a staggering number. Right now, the U.S. debt payment is currently 185% of GDP. Let me say that again. The U.S. debt payment is currently 185% of our GDP, and 200% is considered unsustainable. Now, let me ask you a simple question. What's the clearest path forward to correcting this? And unfortunately, it is to increase taxes. Now, nobody wants taxes increased. Absolutely. That's I think pretty much across the board, we can all agree with that, especially when you're in retirement. But let's face it, that is going to be the simplest way. Now, there's some other things that can be done, of course, for sure. But I'm just talking about the simplest because that's typically, it's hard to get anything done in Washington. So getting the simplest thing done is probably what they're going to wind up doing. So my question for you is your IRA that you currently have a tax trap? Is it a trap? Is it? And when I'm saying IRA, I'm even meaning 401k, 403b, TSP, all of the type of pre-tax retirement plans. Is it a trap? And what do I mean by that? Well, I have people that come into me all the time and say, okay, Tim, well, I've got $400,000 in this account. I'm doing pretty good. Well, you absolutely are. Absolutely. But if it's all in pre-tax money, you don't have $400,000 in that account. Well, what do you mean? Of course I do. No, you don't. What's your tax rate? Let's say they're at 22%. You've got a little over $300,000 in that account because the government owns the rest. Depending on what your percentage is, you're going to have to pay those taxes at some point. Traditional IRAs, 401ks, any of those type of plans are taxed at current tax rates at the time of withdrawal. So making a plan for that moving forward is very wise. Now, I talk about this in depth in my book, Safe Money Retirement, Your Game Plan for Success. If you don't have a copy, do yourself a favor and get a copy right now. You can go right to our website, SafeMoneyRetirement.com. Get your copy absolutely free right there, or just give us a call, 833-413-SAFE, and we'll send you a copy. Now, what you need to think about is how are you going to pay the taxes that's in your IRA, 401k, whatever. I'm just going to call it all IRA, but it covers all of those type of qualified pre-tax plans. How are you going to pay those taxes? You've got to think about that. We need to make a plan for that. We need to have a discussion about possibly, even while you're still working, let's do some conversion over to Roth, or even after you're stopped working and you're at a very low tax rate, that's a great time to do some conversions over to Roth. Why is Roth so great? You never pay taxes on the initial amount, the principal, or any of the growth as long as the account's been open for 5 years. They're great, but you've still got to pay the taxes. That's why I have some clients that are biting the bullet right now and doing huge Roth conversions under the current tax code because it expires at the end of 2025. Now, of course, none of us have a crystal ball that works. So we don't know what the tax rates are going to be moving forward. But again, the simplest solution is to raise the tax rates. And unfortunately, the simplest solution is typically what we get out of Washington these days. So having a plan for what you're going to do with those taxes is a very wise move. Now, again, some people think, well, I'm leaving that IRA to my 3 sons, let's just say. I'm doing a third to my 3 sons. Okay, well, that's fantastic, but they then are going to have to pay the taxes. And if it's not your spouse, there's a few other possibilities, but for the most part, I'm generalizing. For the most part, if it goes to them, they're going to wind up having to pay the taxes on that, and they're going to have to do it within 10 years. They can't wait till they're at retirement age, unless they're, much older. But they're going to have those taxes paid within 10 years. So depending on how much you leave them, that could wind up bumping them up in tax levels, and that will be retroactive all the way back for them. So we need to make a plan. We need to figure out what can we do. So here's one real quick tip that I have in my book that I mention to people all the time, but they don't realize it. People ask me all the time, Tim, how can I keep from paying taxes on this money? Well, after laughing and wishing I had a good answer for that, because I'd be on every TV show that there is if I had a good answer. But let's be realistic. The only way to not have to pay taxes on that money is to leave that money to a charity. Now, what do I mean by that? Charities don't pay taxes. So if you were to leave a TSP, a 401k, any kind of a pre-tax account to a charity, they're not going to have to pay the taxes on that money. So when I am doing a plan with my clients all the time, I tell them, let's make a plan to leave after-tax money or Roth money to your descendants, as far as creating a legacy, or let's put it into a life insurance policy that's going to pay just a cash benefit when you pass. Let's try not to leave a tax trap to your beneficiaries. So that's a whole other conversation. But having a plan, that's the point of this, is you need to have a plan. How are you going to handle the taxes that are due in those qualified pre-tax type of accounts? There's several things you can do. You can just let it go and pay the taxes when you take it out. That is an option. You can go ahead and bite the bullet right now and do huge Roth conversions and pay the taxes at the current tax rate and then have that tax-free for the rest of your life. That's an option. We can put it into an account and you can say, okay, over the next 10 years, I'm going to convert 10% per year. That's an option. There are a lot of different things, but you need to have a plan about how you are going to overcome the IRA tax trap. This is Tim Wood, your host of the Save Money Retirement Show. I'll be right back after this informative message.
Is your money sitting on the sidelines in a CD, savings account, or money market account, earning next to nothing? If you have your money in a bank, the value of your money is getting destroyed by inflation. Don't let low interest rates get you down. How would you like tax-deferred growth higher than what banks offer? Why let a bank pay you next to nothing when you can get 3 and 5-year fixed annuity interest rates over 5% tax-deferred? Some fixed annuity contracts even let you access as much as 10% of your account balance, surrender penalty-free. Call us now for your short-term money solutions at 833-413-SAFE. That's 833-413-7233. Fixed annuities are backed up by the claims-paying ability of the issuing life insurance company and are not FDIC insured. We have software to help you choose from hundreds of highly rated life insurance companies. So call us now at 833-413-SAFE. That's 833-413-7233. You're listening to the Safe Money Retirement Show with your host, Tim Wood.
Welcome back to the Safe Money Retirement Show. I'm Tim Wood, a Safe Money Retirement Specialist. Can you live with the worst case scenario you can play out in your mind about your retirement account? What is the worst case scenario that could happen with where your retirement nest egg is right now? We need to take a look at that, and you need to stop and really take a look at that worst case scenario. And if you can live with it, then fine, the upside will take care of itself. But if you can't live with it, then you need to make a change. Getting a copy of my book, Safe Money Retirement, Your Game Plan for Success, will help you understand what the potential changes can be and how you can get yourself out of that potential worst case scenario into a scenario where you have protections, you have longevity insurance, you have guarantees put up by huge billion-dollar insurance companies to protect you while you're in retirement. So being able to basically overcome that worst case scenario is a huge, huge deal. I explain some of this in my book, Safe Money Retirement, Your Game Plan for Success. Get your free copy at my website right now, safemoneyretirement.com. But I explain what you can do to get yourself out of that potential horrifying, stressful, keep you up at night worst case scenario. We need to get you into a worst case scenario that you still can say, okay, well, if that's the worst thing that can happen, that's not too bad. I hear that quite often with the type of growth plans that my company, Safe Money Retirement, works with. Because even in the growth plans, even if you put 100% into a fixed indexed annuity that is credited based on what happens in a particular market index, if that index goes down, the worst case scenario is you don't make any gains that year, but you don't lose any. That's the worst case scenario. So you need to determine what is the worst case scenario for where you are right now, where your retirement account is right now, all of your retirement accounts. I'm talking IRAs, 401ks, TSPs, 403bs, all of them, whatever you've got. You need to make sure what is the worst case scenario and what can we do to take that worst case scenario off the table and make it something that is absolutely acceptable. I mean, it certainly may not be still the best case scenario. It's the worst case scenario. Let's face it. But something that the worst case scenario isn't catastrophic. Something that the worst case scenario isn't, oh my God, I've now got to go live with my son-in-law and I can't stand him. We need to make sure that's not something that's going to happen. So we need to make sure that we plan for the worst and hope for the best. But let's make sure your personal worst case scenario is something that you can live with by making sure you have enough guaranteed income, by making sure the money that you can't afford to lose is in a product that's protected from any kind of future market event. And then, and only then, will you know that no matter what happens, I can live a happy, healthy, and safe money retirement. Well, I'm about out of time, and I would like to thank you for listening to the Safe Money Retirement Show. If you're serious about your financial future, give me a call, and together we'll get your retirement savings on the fast track to accumulate while reducing exposure to market loss. Thanks for listening, and until next time at the same time, I'm Tim Wood reminding you to stay safe so you can step into a secure future.
You've been listening to the Safe Money Retirement Show with your host, Tim Wood. Find out how to contractually guarantee that your hard-earned money is safe from market losses and that you have an income you can't outlive so you can have the retirement that you deserve. Call Tim Wood now for your complimentary Safe Money Retirement book and information kit at 833-413-SAFE. That's 833-413-7233. Or request your copy of Tim's book online at safemoneyretirement.com. The preceding information does not represent tax, legal, or investment advice. Surrender charges apply to base contracts. Optional lifetime income benefit riders are used to calculate lifetime payments only and are not available for cash surrender or in a death benefit unless specified in the annuity contract. Fees may apply. Guarantees are based on the financial strength and claims-paying ability of the insurance company. No information presented today should be acted upon without meeting with a qualified and licensed professional. Obviously, by calling us now, you are just taking the first step towards protecting your retirement. It's important that you read all insurance contract disclosures carefully before making a purchase decision. Rates and returns mentioned on this program are subject to change without notice.